Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, it is quite the day. The whole world is watching today for Liberation Day, aka are we going to have, how many tariffs are we going to have? How many reciprocal tariffs are going to be placed on the United States? How is that going to affect the economy? We will soon see. I have no answers for you right now, as I'm not a macro economist. But we've got some other interesting things happening in the crypto space. Circle filed officially for their IPO. They are the stablecoin issuer for USDC, if you're not familiar with them. And we're also seeing a ton of progress right now on the stablecoin legislation in Congress. And a lot of industry leaders are expecting to actually see some results there. But as always, we're not here to just talk about stablecoins because they don't really go up and down much. We're here to talk about actual tokens in the market. So first, we are going to talk about Gunzilla Games. On Monday, Gunzilla Games, which is the studio behind the popular game Off the Grid, launched their token Gun. So Off the Grid, if you didn't hear about them, they were a PC console game that they launched a couple months ago, I think the end of last year. And they ended up getting a ton of traction in early days. Basically, you don't need any crypto knowledge to kind of start playing. There's no wallet setup or anything like that. A lot of the backend, the blockchain features are abstracted away in the backend. Used for things like their marketplace and rewards, which are given out in the Gun token. So a lot of people have been really excited about the potential for mainstream success for this blockchain-based game or crypto-based game. And we'll have to see where it goes. So the blockchain, like I said, components, part of it is that there's something called Guns Chain, which is running as an Avalanche subnet. If you're not familiar with Avalanche, Avalanche is a layer 1 protocol. And the way that their architecture works is that anybody can kind of spin up what's called a subnet, or kind of like think of it as an L2 using the Avalanche main blockchain as like security back for them. So that's kind of how that works. But so that was like kind of a cool thing to finally see. They've been a very highly anticipated game for a while. However, following the launch, a letter was leaked on X yesterday, and it suggested that the Gunzilla team is actually looking to adjust some of the unlock terms for the token for early investors. So the new terms would kind of force early investors to be locked up for longer, but a lot of it has kind of sparked some speculation that now investors are trying to sell these early deals because they have been invested and locked up for so long. Again, this is all just speculation. Nobody really knows, and we don't even know what the results of it will be. Will it be better for the token, worse for the token? It really depends on kind of what your view is on token unlocks. The Gun token debuted on Binance on Monday at a price of around roughly 10 cents, which was about a $60 million market cap. However, it's since traded down and now sits at about 5 cents. And Gunzilla is officially down 43% for the week, 50%, I guess. All right, we're going to talk about Hyperliquid. This was like the big thing that happened in the market last week, and I'm going to do my best to kind of distill it down here and not make it too complex. Okay, so Hyperliquid is the largest decentralized futures exchange that exists. They run on their own chain called Hyperliquid EVM. And so last week, there was a liquid perpetual futures market for this small cap token called Jelly Jelly. The ticker is Jelly. And it basically threatened to potentially drain funds from the protocol. The Jelly perpetual market basically experienced some instability. A user decided on Hyperliquid that they would take out a $4 million short position on this token, which, keep in mind, had at the time about a $10 million market cap. The token then rose about 4x in the spot market, which liquidated this short position, forcing the HLP to take over this position, which led to losses in account value. So the HLP, if you're not familiar, is a vault, which kind of acts as the market maker on the exchange. And essentially it takes the other side of trades, especially in these like very illiquid markets. Users deposit the thing also is it's not just Hyperliquid assets that are in there. It's any user can deposit USDC to it, but they share in the profit and the loss of the exchange in these forced liquidations. So this was like really upsetting to a lot of people because it was such a small liquid market on such a tiny coin that a lot of people were like, how could this even happen? A lot of people actually started Binance and OKX of conspiring to damage Hyperliquid, saying that they, took out this position, that they basically were, manipulating the spot position on their own exchange since they immediately listed perps at the same time that this short position was taken out. And a lot of back and forth. So in response to this event, Hyperliquid's validators voted to close out that user's jelly position at a price that would basically cost the exploiter $100,000 instead of awarding them on their short position. So the big issue with this, though, again, is that it really kind of showed that there was, for a lot of folks, they were really concerned about it because it kind of showed that Hyperliquid is not as decentralized as it appears to be. A lot of the validators are owned and operated still by the Hyperliquid Foundation. And so it really wasn't like a hard sell for them to all say, hey, no, we don't want to, damage our exchange like this. And a lot of people have kind of come out of the woodworks criticizing them for this. So it's really up to each individual how they want to view this. I think, on the one hand, I think this is all still really early and experimental. On the other hand, it does show that, yes, they can trade against users for their own benefit, but they can also kind of roll back things if they don't like what the outcome was. So anyway, the Hyperliquid Foundation did promise to compensate any users that were long this market. So basically anybody who was unfortunately liquidated that wasn't this exploiter. And they also have made a bunch of changes to kind of like the risk management of their exchange to protect against these types of issues in the future. Without getting too technical, there were a few reasons that this position should have been essentially like wound down automatically by the system instead of passed off to the HLP to absorb the losses, and it didn't. And so they've kind of made those changes. They've talked about they want, a lot of people have called for, you need better risk management on these really small liquid assets. And this is the thing, Hyperliquid has really made their name. They have made a market in being able to list long tail assets and offer futures on them where you don't get those types of futures options in the big exchanges like Binance and OKX, and definitely not even on on the other perpetual exchanges. So this is a huge part of the market for them. So they probably don't want to give it up. Anyway, again, the biggest damage though from all of this has been to the HLP, which I mentioned is kind of basically community funded. They basically get this variable yield based on Hyperliquid's business returns. So many of these users were spooked by this event, the second such event in the past month, and the HLP has since seen outflows from last Thursday when this happened, bringing its TVL down from about 296 million to 182 million at present. However, those who did stick around in the HLP, you're going to earn more yield because you have less people in there. So we'll see. These are all interesting market dynamics that we will continue to monitor. Hyperliquid, unfortunately, really was hit hard by this. They are down 23% this week. Okay, last up, we're going to talk about Phantom or Sonic. Layer 1 protocol, Sonic. So they used to be called Phantom with the ticker FTM, if you're familiar. They announced last week that they're going to do a big update to their consensus algorithm, which they claim will increase speeds on chain by 2x, which should be a big deal for them. The protocol also announced that they've disabled part of the migration bridge between their old token, FTM, to S, the new token. So the bridge still allows users to migrate Phantom to Sonic, but not the other way around, which makes sense as they kind of look to move forward and solidify S token as the go forward token. So if you're not familiar again with Sonic and Phantom, basically Sonic relaunched last year, did this whole migration, did the token swap. And since then, they've really picked up a lot of momentum, especially in the DeFi sector. They've had a lot of projects offering very juicy yields to Sonic users. The biggest ones by TVL currently are Silo Finance and Aave, for example. Despite everything, Sonic is still a small project, but they are currently ranked number 12 in terms of TVL. They have $1.5 billion of TVL. So with all this, Sonic is up 1% for the week. All right, you guys, that's all I have this week. Thank you for joining us. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.